Welcome to the Kendall Report. Well, just like that, this week is gone. What we've been waiting for all week is the employment numbers. They will be out today before the opening, and this is going to be an interesting one. More on this in just a minute. But as I look back on yesterday, we saw this big decline trading down into those support levels I mentioned last night on the S&P around the 4169 level. We went right to that, bounced off of it, but we still have somewhat of a negative setup. I'll go through all the details here in just a few minutes in the technical section. But we saw the S&P down 0.4 on the session, NASDAQ down 1%, and the Russell down 0.8. And once again, these markets were down in spite of initial claims coming in much better than expected at 385. We saw the ADP report come in better than expected, 978,000 new jobs. ISM non-manufacturing came in better than expected at 64%. The one negative here is the Q1 labor cost was up 1.7%, showing some wage inflation starting to come into the economy. And the big question is, I think, on everybody's mind, is this setting the tone for the Fed to taper some of their purchases and have another taper tantrum? I don't believe that's the case. They're going to keep their foot on the pedal here. They're not interested in backing off just yet. There's too many pressures out there for the Fed to back up. So I don't see that happening. But depending on how this report comes in on unemployment today, which is expecting to show 720,000 new jobs, if that comes in at 1 million, or it comes in as expected, or if they revise last month's 260 dismal report up maybe to 400 plus, then that will be the same as getting the 1 million jobs. Net, we're still underperforming. If this occurs, it's possible market sentiment could be affected by this and we start to see more selling. My expectation is, as I'll go through the details here in a minute, that that's not going to be the case. As far as our database goes, there's not a lot going on there. We saw a slight negative rotation in tonight's run, so nothing really there. This is a Friday, so we will be running our intermediate models. My expectation there is that we'll see the database continue to remain above the 68% level. It may even increase just a little bit. There's some interesting rotation going on, as I talked about in a couple of videos ago, that we're seeing a lot of rotation coming in the small and mid-cap areas, and especially some of the action that we've seen in energy this week, as well as financials. As we come into Friday, we're coming into a reasonably flat week. All of this can change after the release of the unemployment numbers, and that's hard to predict how that's going to come out. I do have some very specific ideas in the technical section. Let's go ahead and take a look at the charts and see how they're set up for Friday's opening. As I review the WaveTech database, we did have 496 buy signals, 529 sells, basically a flat rotation. The bullish percent remains at 61.54, right at that 62% level. A higher close back above 4,200 bases the S&P today. It likely will bring in more traction on the short-term database. Also, as I mentioned in the opening comments, we run our intermediate or our weekly models, and those will come out. I do expect to see some slight traction on there. They're currently around 71% long. The configuration in the short and intermediate databases remain very bullish. So all we're seeing here is that consolidation in the markets, which is finally starting to set the tone for what constituents are likely to move the markets further on the upside. As we review the S&P futures, we're down 4.5 handles overnight, 41.8650. We have traded down to 41.77, high 41.9425. As we look at the market grid for today, S2 should be the low. I don't expect to see this level taken out. R1 4200 is a likely target. We could see an R2 today. Just with the news coming out, we're likely to see a kick up in volatility. The configuration as far as the market grid goes expanded a little bit as we did see the markets finally start to see a broader range yesterday. We traded down toward the support between this 41.68, 41.65 levels. Those are pretty key levels.
both the 21 and 40-day moving averages. I discussed those last night. Looking at the PPM, PPM2 did cross through its first and second derivatives. That's slightly negative. It does suggest we're likely to stay in the sideways range. If we do penetrate the 4210 level, that will set the tone for a sharply higher close today. But most likely what we're going to see is a range of an S2 R1, possibility of an S2 R2. As we look at the S&P, yesterday the low of the day was 4167. The 40-day moving average 4166.83. Basically, we hit that. We bounced off of that level. We managed to close back at 4192. If we look at the market grid for today, it's actually sloped down just slightly, very similar to the numbers that are on the futures. 4200 is R1, S2 4177. So that is likely to be an R1, S2 range, but also the probabilities are for an expanded volatility today, which would put us into an S2, R2. I want to review the weekly chart as we come into this week. As I mentioned, we basically have traded in a very narrow range on a closing basis. We're almost exactly the same place every week for the past 5 weeks, but we are continuing to stay above that 10-week moving average. I've talked about this a lot. 4165 is going to be major support. PPM1 is up at 0.53, suggesting there's only a 30% probability to close under that level today. And this is why when I reviewed the daily charts that I thought this 4165 level would hold, primarily because of the weekly pattern, not necessarily of the daily. So there is solid support at that level. Next market I'll review is the NASDAQ futures. In last night's video, I thought we could trade down to an S2, S3 level, which would be down to 13,582. Yesterday's low, 13,462. We actually penetrated through the STX number. There's also the 21-period moving average at 13,475. So we printed down to that. We saw a slight bounce off that level as the NASDAQ closed fairly weak. Overnight, we're seeing a flat market. The levels that we're going to watch today as we look at the market grid for today is for an R1, S2. Right now, the low 13,467. The S1 is 13,487, so we're just slightly below that. So look for an S2 R1 here, but also all of these charts are set up the same. My expectations is that it will normalize out between S2 and R2. The final market I'll cover tonight is gold. As I mentioned in last night's video, I thought there was some vulnerability to the downside. Thought it would take several days to get to levels it got to yesterday. We traded down toward the 21-period moving average, which was 1873. I mentioned also that I thought we could trade down to the 200-day. We actually have done that overnight. The low so far overnight is 1855. That 200-day moving average right now is 1844, so we're about $10 off of that level. We're also looking at the market grid for today. The S3 number is 1851. STX 1844 is the 200-day moving average. That will be your extreme. We should see this market bounce back a bit. We did a full retracement just in 2 sessions, actually. So my expectation here is that we'll start to trade in a sideways range. We should remain above the 200. Everything points to that, although we are seeing very quickly the momentum on this market really die as the PPM1 is in a negative phase. PPM2, 3 are both in a positive phase, even though PPM2 has crossed through its first and second derivative. That in itself was signaling that we would at least trade to the 21-day moving average at 1873. The key level to be watching here is that 1844 level. Close under that level would suggest further declines all the way down to 1827. I do not expect that will be in the pattern. Just quickly looking at the weekly chart, 1847 level, which I also mentioned in last night's video, is the 40-week moving average. That's very similar to the 200-day. That is going to be your major support. PPM1 is still very positive, which is up at 0.74, suggesting that the 10-period moving average could come into play. It is rising right now at about 13 handles per week. So that's going to put it up right to that extreme level I just discussed, around 1825, 1835 should be the bottom of this particular pattern. And it will take 5 to 8 days for this pattern to complete itself. So expect to see a range between 1844 and the 1885, 1895 level on the upside. This will complete the video for tonight. Thanks for watching. Thanks for coming to the live stream on Wednesday, and have a great weekend. We'll talk to you on Sunday night.
Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.